What's going on, good people? Again, this is Jamarcus Trahan. My Instagram is at J with MBA. Today episode of Money Mondays is about life insurance. Life insurance 101. All right. You ever been to college? You know that 101 class, that's the basic class. All right. So I'm going to just give you the basics of life insurance, right? This was requested from me by some people that saw my first Money Mondays episode. All right. So they say, hey, man, talk about life insurance. All right. So I'm gonna give you the basics of life insurance. I used to have a life insurance license before I really got into taxes. So I used to be an agent. So I'll just give you the basics. All right. So let's start off with the main purpose. All right. Because some people say, what is the main purpose of life insurance? What is life insurance for? Life insurance, from my professional training, is to protect survivors financially. All right? It's to protect the survivors financially. It's not for, man, I'm about to go get this new car. I'm about to go do this. I'm about to do that. Whatever you do with it, that's your business. But the official purpose from my professional training is the main purpose of life insurance is to protect survivors financially. All right. So again, based on my training, they taught me things like things that it's supposed to cover, like burial expenses. All right. Also, I was taught it's supposed to deal with the deceased person's debt. All right. You don't want to leave that for your family. You want to have coverage for that. Also, things like income replacement. All right. So you say this person is used to living with your salary, so you want to provide for them some income replacement because you're gone. All right. And lastly, things like, I want to leave some type of inheritance. All right. Hopefully, I spelled this right. All right. Inheritance. It could be if you have children, it could be starting a college fund, things like that. So these is the main official general purposes for life insurance. All right. So the next question I get is, Jamarcus, how much do I need? Like, what face value should I have? How do I know? Am I underinsured? Am I overinsured? How do I know how much I need? All right. If we stick to this model, I'll give you some general ideas, and then you can go from there. Right? Now, the answer to the question is, it depends on what you want to do. Right? It depends on your financial situation, age, things like that, where you are in life, things like that. But I'm going to just give you a general overview. Right? So, according to my friends in the burial industry, my contacts that I have with these burial companies, and the average funeral expense is anywhere from 7K to 10K. All right? 7,000 to 10,000, right? If you want to just cover burial expenses at the minimum, I wouldn't recommend anything under 10,000. Right? This is not the 80s. I know some older people got their policy a long time ago, and you've been paying on it. But you need to check the current cost of burial expenses, because they have to bury you now, not when you got the policy, right? So you want to always be currently checking how much is the average funeral cost. And my friends in the industry say anywhere from 7,000 to 10,000, right, to have just a decent funeral. All right. Next is debt reduction, right? Now that will be determined by the actual person, right? Now, the average debt in America is about 35,000. That's without a mortgage. All right. So without a mortgage, the average person in America has about 35,000 worth of consumer debt. That might be credit cards, car notes, student loans, things like that. Without the mortgage. So if you want to replace that, if you want to take care of your debt, so you won't leave your family a burden, you might want to consider adding how much debt you're currently in, plus your mortgage, if you want to cover that, so your spouse can be secure in the house. All right. So next is income replacement. So you just, Jamarcus, how do you go about income replacement? Well, you actually just multiply the number of years you want to give them, the number of years of income replacement you want to give them, times your average salary for the year. All right. Easy example. If you make $40,000 a year, which the average American does, if you make $40,000 a year and you want to give them income replacement for 2 years, right, till they get back on their feet and get back to, well, that's at least $80,000 in your premium that you need, right? So whatever number of years you want to put in that income replacement, multiply the number of years times your average salary. All right. Inheritance is to be determined. That's to be determined by the individual. All right. If you have children and you want to provide a scholarship opportunity for them, or not scholarship, but college fund for them, things like that. If you want to just give them some benefit, hey, I want to set this up for you. All right, that'll be determined by the individual. All right. So if you took at the bare minimum, I would say is $10K. But if you add some debt in there, so burial expenses plus debt, that's what 45, around about 50,000, without any income replacement, without getting fancy, any inheritance or income replacement. I would say the minimum is about 50K, especially if you have debt. Now, if you're older and you don't have much debt or everything else been taken care of, then burial expenses is at least 10K. All right. Jamarcus, so how do I know what to pick? All right. Now, next week I'm going to do the difference between term insurance and whole life. Those are the main two different types of policies. You have term insurance versus whole life. All right. Now, the main difference is in their name. Term insurance is for a set term. You're covered for X amount of years. Whole life, as long as you keep paying the premium, it covers you for your whole life. All right. Now, term, you say, why would people only do term? Well, term people pick term because their financial situation is in order. I just need coverage until I can handle these things on my own. And once I handle these things on my own, hopefully the term will expire and I won't need to re-up on the insurance. I can save myself those premiums because I've handled my business in that term. All right. Versus whole life, people, well, I just want to keep it my whole life. So I'll go more into the difference between those two maybe in the next video. All right. So my philosophy when it comes to insurance is the KISS principle. Keep it super simple. All right. Keep it super simple. Don't get those specialized life insurance policies. This is my opinion. Mortgage cancellation insurance. Well, you don't need mortgage cancellation insurance. Just put the amount of mortgage into your premium amount. Because all it is, not premium amount, all of this goes into policy amount. All right. So you don't got to get no specialized policy for mortgage cancellation insurance. Oh, okay. Well, just put how much your mortgage is. Make sure the face value of your account covers that. Right? So you don't have to get those specialized life insurance policy. Also, stay away from accidental death and dismemberment. Stay away from those things. Listen, if you die, you die. Get regular, either term or whole life insurance. You don't have to get specific. You don't know how you're going to leave this earth, right? And you would hate to have that policy and it not pay out. It has happened before, over and over to our people, right? Last thing on this, in my opinion, one good policy, in my opinion, is better than having multiple policies that really are ineffective. And especially when it comes to premiums that you're paying. It's a lot easier to get one really good policy than it is to be paying premiums on multiple policies that's really ineffective if they were by themselves. All right? Again, this is Jamarcus Traham. This has been Money Mondays, episode 2. Peace.